So thank you very much for inviting me, Prem, and the great, large gathering here. I've been a very firm believer of active management, and I'm actively being involved into passive confidence. So, and but nevertheless, here I've been a disbeliever for a long time for a variety of reasons, and many of those variables might be changing. And today we have come to a point, where it's a very diverse market. It is a very broad market. It is, and given the compulsions and the institutional framework, some of the things might be inevitable. Would you like to take me a pause for introducing the DP Singh?
Everybody in the way.
Okay, everybody knows DP Singh. Okay. No, but formally, I would like to welcome DP Singh. He has recently gone up the ladder to be almost running SBI mutual fund, but getting redesignated every few years. Yes. So passive has become very significant, and passive, you have a category of fund where somebody chooses to settle with an average. It's a very difficult decision. Everybody is attracted to the equity market to beat the market, and coming to the equity market, investing in equity market, investing for the long run, and settling to be an average, not beat it, not beat it either way, or get beaten. So this may not be an easy choice, but it is better than most of the other things which most investors do. And which is, just now before coming here, I was looking at my Twitter timeline, and I got a very interesting message that somebody's childhood friend wanted to do SIP of 25,000 rupees. And SIP is considered to be a good thing. So a good thing and too many good things can also be much better. So he's now doing SIP in 25 funds every month. And so that is too much of a good thing. And that is where I think, index funds do play a role. Index funds do play a role because at least you will be assured of the low cost. You'll assured of what it will be. And you will not be driven into these 25 SIPs getting debited from your bank account every month. So in that sense, it's, and if you end up, in fact, my sense is that if time takes care of everything, even if you go wrong and you invest in equity, diversify, keep doing it for 10, 15 years, things get sorted out anyway. Index, no index, passive. So it's a very meaningful thing. And of course, I live in Delhi. I deal with the government's, machinery, their thought process. And what has happened to the index fund today? If it was not for index fund, government would not, government employees' money would never have found its way into equity market. It is not the ultimate thing, but it is next best thing than, not doing it. And I remember when they started investing in equity, every 6 months, the government, undersecretary or junior secretary or somebody will give a press statement that in 6 months we have lost this much. They think that, index and periodic investment, they should be guaranteed, it should always do well. So getting on to now, this is a very broad understanding or my evolution, my thinking about index, the way it is evolving. But we have now all the stalwarts, and I need to ask the real questions which you people have experienced or encountered. And so I've created a set of questions for you people. So, Mr. DP Singh, what are the decision drivers for different type of investors? They choosing a distributor, various investors choosing a distributor. How do you see this evolving response to tech and industry trade?
You're talking specifically of passive funds or generally?
Passive and generally speaking too.
Yeah. Generally, though, of course, the role of intermediary is extremely important for hand-holding and all those things, and things are moving in a manner. The only problem which we are saying is the number of distributors is very meager as per what should be. It is not even 25% of that. That is an issue which the industry is now grappling with, how to get more and more number of investors. But of course, when we talk about MFDs, sometimes we don't talk about the aggregators whenever with like the national distributors and bank employees, etc. Put together, number is bigger, but I think we need to have many more number of MFDs, which is extremely important because of the confidence, the trust they enjoy of the investor. But that is true for the general active funds. On the passive side, as of now, the contribution of MFDs or the distribution community is very less because of the you talked about the lesser cost. When the cost is lesser, naturally the intermediation cost is also lesser, or very meager. So that's an issue. So the role of intermediaries in the passive funds is limited. But as of now, a lot of do-it-yourself customers who are there, they are coming in a big way. If we look at the data, the new customers which the industry is adding, almost 40 to 50% customers are coming into through either fintechs, which are selling the direct plans, or they are coming through the direct mode on the websites and other platforms which are available. So platforms are becoming extremely important nowadays, and that's the shift we are seeing. But even with the remaining 50%, there's too much business on the table, which MFDs, they should not be worried about that the percentage is going up. The percentage is going up, but the numbers itself are going very high.
The scale is growing.
Yeah, cake is so big, and there's too much business for everyone. Every restaurant, look at number. I mean, 1 month we got 1,000 crore of extra SIPs. Even if that 500 crore is contributed by the distributor community, 500 itself is a big number. So one should not be worried about what is happening. Ecosystem is getting evolved, getting made up, and the industry is maturing. But I think there's a huge scope of growth from here on as well.
What do you think? You have been traveling quite a bit, Navneet. And what is your observation about the investor's decision framework about choosing a distributor, role of technology, and the booming market for a couple of years? What are your observations on this front?
So first, few things on the passive side. The last year, 2023, was a historic year where in United States, the passive equity AUM overtook active equity AUM. The overall AUM is more than 50% in passive now. A large part of that is in ETF, and there are tax benefits, and there are a variety of other reasons because cost of investing in active fund and US historically has been very high, unlike India, where I think over the years, both due to the regulatory regime as well as the competitive intensity, the cost has been relatively lower, and the cost that an investor pays in an active fund, which is all inclusive, that includes the fund management, that includes servicing, that includes distributions, whatever advice, and then every single thing is inbuilt into it, and there is no hidden cost unlike US, and that's why we still see, and then the long-term track record. I think you have funds going back for 30 years delivering alpha across all time periods, and every single time people questioned the ability of the active managers to deliver alpha, I think next 3 years they surprised on upside. Let's say 3 years back, a lot of people thought there was 1 or 2 years where active funds didn't deliver alpha, and then last 3 years have been just phenomenal for some of the fund houses like ours. So then you have a long-term track record, you have, I think the overall cost, which is not very high. So on a relative basis, the attractiveness of passive to that extent is lower. Having said that, it's interesting that at the upper end, the total passive AUM in India is 9.5 lakh crores. It's almost 17% of industry AUM. Just to put that number in perspective, 9.5 lakh crores, the total industry AUM of mutual fund industry as a whole, 10 years back was 10 lakh crores. And that's where we have reached only in passive. Of course, out of that, 7 lakh crores is in ETF and 2.5 lakh crores in index. 7 lakh ETF, probably 4 lakh crores would be the EPFO, XMPF, CPSE, Bharat 22, Bharat Bond and all. But that remaining 2.5 lakh crores is like index fund, which also includes some of these offshore fund and the fund of gold, etc. But it's still not a small amount, and it's been increasing. As DP mentioned that in distribution, what has happened that the fintechs and RIAs have played quite a bit of role. So interestingly, in that 2.5 lakh crore, 55% of the AUM is individual investors. So it's quite a bit of individual participation. But from a distribution perspective, 78% of the AUM is in direct plan, and 72% is in direct plan, and 28% is distribution. This is almost a mirror image of what you have on the active fund side, almost a mirror image. And then there the percentage, of course, they are also selling, but the percentage contribution of banks, NDs, MFDs have come down, and RIA and fintechs have become pretty large. So now today, if you look at the index AUM, almost 14% is fintech and 11% is by RIAs. They are like almost together 25% of the AUM, because in last couple of years they have sold quite a bit. One interesting thing I tell you about the popularity of index fund, that B30 used to contribute in low single digit till let's say 6-7 years back. Last year, 20% plus flows came from B30 towns in index funds. So there is a widespread awareness, and it's the effort made by everybody and all the people sitting here, the credit to everyone, that efforts made by everyone. And I think and the number of, let's say, the ETFs have doubled in India in last 4 or 5 years, from like 70 odd to now 200 plus ETFs, and then number of index funds have also gone up. As a house now, we have like almost 40 products on the passive side between ETFs and the index fund, and so is the case with a lot of other funds, creating the awareness, doing a lot of things to also spread awareness about passive. I strongly believe in India for not the foreseeable future, but for a very, very long time to come, the debate will never be active versus passive. It will always be active and passive. They will coexist. They will grow together. And this is the same in US. It's very interesting. I told you that 50% AUM is now an active. So in 1980, when let's say the passive started taking off in US, that time a Fidelity or a Capital International would be managing 50, 60, 70 billion dollars. Today they manage 3-4 trillion dollars. The active guys also. The passive guys have also grown and they become quite big. So both have grown. But in India, I think for a variety of reasons, as I said, particularly the cost itself is so, low. And there's a very interesting study of, I think by Kotak Securities, that a lot of these things about the number of active funds that outperform, if you adjust it for the AUM, then the percentage AUM that outperform is very high, very, very high. So that means the larger funds that keep delivering alpha, they get more money and they become bigger and they deliver more alpha. So if you adjust it for AUM, that number is very large. That will keep growing. I think for given the overall economics of the business, I think the active funds will continue to be preferred by the product appeal will continue to be preferred by large number of distributors. But there would be channels, I think, would also focus on the passive. So there would be like growth on both sides for a long time to come.
Prem, you interact with a lot of distributors, and is indexing naturally anti-distribution, because you have less to choose, less to decide equity, and less to answer.
Actually, I have a different perspective on that, Dhirendra. As far as particularly index funds are concerned, I think they make the life of the distributor a lot simpler, according to me. One, they're obviously cost effective for the investor. Number two, they're very transparent. You don't have to really explain. Once you've told them this is index to so and so this thing. You don't have to justify the sector allocation, the stock selection. There's no threat of underperformance either. The performance is fairly stable and predictable to the extent anything in markets can be stable and predictable. And on top of that, it's a very low maintenance product for the distributor. Distributors, I know, a lot of them have taken upon themselves the onus of delivering superior returns. Now that, according to me, is a bit of a challenge because it's very difficult to pick out tomorrow's winners today. We've all seen it. We've tried.
Basically, you're saying that blame it on the index.
Sorry?
Blame it on the index.
Yeah, to blame it on the index, which makes your job far simpler because already there is a lot of evidence to suggest, and in the last presentation, which was made by Vikas, we saw that a good number of funds are not able to outperform the underlying benchmark. And for us to be able to pick out the winners in advance, it's a bit of a difficult task. So I think index funds make the task very clear, the task very easy for the distributor. What is the investor finally looking for? I know there is a set of investors who will not be satisfied with anything but the best returns. But for a lot of investors, it's about reaching a financial goal. It's about having peace of mind, building up a corpus, creating wealth in the long term, meeting a goal. So I think index funds particularly meet the job very well. And it's a good idea for distributors to look at a combination of both passives and active in the portfolio. They de-risk the business a lot by not putting the eggs in the same basket. I said earlier in the day also, we carried out some research which suggested that 90% of the distributors have 90% of their portfolio in active funds. Now, and that according to me is a highly risky business model because you are too dependent on external factors so you need to diversify, and one logical step towards diversification is to look at passives. And I think this way they will be able to grow their business, grow their revenues in the long term.
Just 1 minute, all those who think that all the nirvana can, come from the passives, I just tell you one or two things. I told you about US. Last year, more than 550 ETFs got launched in US, more than 2 a day. And it's been there for 40 years, right? And 250 got closed. It was so simple. I mean, every day, 2 products getting launched and 1 product getting closed. I just tell you one story about the index. And by the way, we have 40 products and 3 of my colleagues are sitting here day in and day out. Their job only is to sell passive funds and talk about all the good things that Prem mentioned about the passive and what Mukesh is going to talk about. I do it all the time. Tesla became 6th largest company in the US in terms of market cap, but for a variety of reasons, it did not come into the index, reasons known to the index providers. The day it came into the index, in the next couple of days, like the day of the rebalancing, if I remember correctly, more than $70 billion of stock had to be bought. On the last day of when you have to actually get into the index, 25% of the company got traded. In this period, because of this, the stock went up by 50%. And I can tell you 10 or 20 or 30 other stories like that. So obviously, I mean, the active guy doesn't have to do all of this, right? I mean, and that's why over the years, because there is a time arbitrage, there is a research arbitrage. And I think if you put the right information edge, analytical edge, and the behavioral edge in a methodical manner, and then keep strengthening both your people and processes over a long period of time, we have delivered alpha, and I have no reason to believe that if you could do this for last 30 years, there is no reason to believe that we won't deliver it for next 30 years.
Okay, Mukesh, what Navneet is saying is a little alarming, that index could be dumb. Because when you can anticipate what will be added to the index, you know that the index is very significant. Certain allocation will definitely find its way into index. How do you beat it?
Sorry. I think let me just come to it. I think before I come to your question, let me share some facts actually. So if you look at, Navneet shared a lot of facts about it. If you look at it last year, even if I was surprised, 24,000 crores of fresh inflows happened into index equity funds. That shows that distributors have started pushing index funds. So if you look at it, the passive is basically two kinds of assets. One is ETF, other one is index funds. In ETFs, holdings by retail and HNIs is only 9%, wherein if you look at the index funds, holding by the retail and HNIs is around 53%. So that means that retail investors are mostly coming through the index funds, and 24,000 crores of fresh inflow, net inflows into index funds, just shows that it's just the beginning, and distributors have already started advising people to invest in index funds. So I think it's a matter of time, because earlier probably they were not advising, is lack of awareness. People have started investing. And I totally agree with Navneet. In the long term, both index funds and active and passive have to coexist. Like US, despite 45 years, it's become 50-50 now. In India, it is 17%, passive 9.68 lakh crores accounts for 17% of the total assets. And if you look at only equity, within equity, it accounts for 22%. And globally, if you look at it, global, US is very high. Global, the average is around 13-14%. So in India, the passive as a percentage of total mutual fund industry is already higher than the global average. Global average is around 13-14%. So I think advising has already started, money is already coming in. And a lot of people earlier used to think that passive, the money is coming in mainly because of EPFO, which is not the case, because EPFO invests only in ETFs. In ETFs also a lot of money came in, but also people don't know that every year now EPFO sells also. Like whatever they invested 5 years back, they sell. So I think retail participation has started coming in. With the increasing awareness, it will come in, but active and passive will coexist, have to coexist, because it will depend on the investors, whether if he's a lazy guy, lazy investor, he should be happy with passive. He wants to take some active call, then he should go for active. And also depends on the asset class. Now coming to index, see, indexes are not dumb, but indices also, let me just say that it's rule driven. So none of us who sit in the index company, neither me, despite being the CEO of the company, I can decide what will come in, what will go out, or anyone else can decide. It's all fully rule driven. I think that is the first thing, part of the
Guess.
Huh?
But you can guess.
No one can guess. Rule driven, you can see. Rules are so transparent. Our rules are available on our website. And in fact, people start speculating. So typically, if you look at it, we announce the index changes in the month of February and in the month of August. Mm-hmm. So, and we take the data based on February rebalancing is based on January and data, and August is based on July and data. Our rules, what I'm saying that our rules are so transparent. If you really have the data, people start speculating, and you will see that in the month of August, a lot of newspapers start writing in Nifty, because most of the people are worried about Nifty 50. Nifty 50 mein kya aane wala hai, kya jaane wala hai. But I will not say whether the guesses are right or wrong, but point I'm trying to make is our indices methodology is very, very transparent. It is fully available on our website. So if someone meets the criteria, the stock will come in. If they don't meet the criteria, that goes out. But also I would like to highlight that when we create the rules and the criteria or the rules for index inclusion, exclusion, 2-3 things we take care. One is we want to ensure that the indices should be replicable, because any index, why do we create index? And today, if you look at it, mutual funds, they benchmark, even for active, they benchmark their performance against the indices. If I create an index which is not replicable, then people will not launch those products. So we have to make sure that whatever comes in has to be liquid. The stock trading volume should be good. If you look at Nifty 50, Nifty 50 is the largest today, actually in terms of passive also, almost 3.3 lakh crores track Nifty 50. Almost 50% of equity passive is linked to Nifty 50 today. So what we have done, because that is the largest, so we have created some liquidity criteria that the stock should be available in derivative segment of the thing, but derivatives typically you don't have upper circuit limits and all. Then the impact cost has, like today, if you look at SEBI's rule for passive, is impact cost should be less than 1%. But in this case, we have reduced the impact cost also lower. So these are the 2-3 things we make sure that, and here the inclusion is based on the free float. So free float.
Validate it for the scale of investment that can pour into the fund. Because, Nifty can have very significant ability to absorb your liquidity.
Yes.
But a micro cap index which is created by you may not have, or it can actually be an aberration, or it can cause an aberration.
See, yeah, sorry, go ahead. Go ahead.
So the validation on a scale is very critical when it comes to asset management.
So today, if you look at it, when we create the index, we start with Nifty 500. And Nifty 500, we look at top 800 stocks in terms of full market cap, also in terms of ADV, average daily trading volume. So it's any stock which is in top 800 in terms of average daily trading volumes and in terms of full market cap, they get included. The only thing is, if you look at Indian markets, in our case, the trading volumes are slightly concentrated. Market cap is like Nifty 50 accounts for almost 50% of the full market cap. Even trading volume, they account Nifty 50 stocks account for a significant portion. So mid cap, micro cap, they might have, but whatever when we create, especially for small caps and micro caps when we create, we look at the liquidity. Like today, if you look at it, we are creating a lot of new indices. You might have seen we are doing Nifty 250, small cap, momentum, quality, etc. So there we are trying to put in one extra factor in terms of one is quality. So that we have put in some quality criteria like pledging and then whether they hit circuit and all those kind of stuff. And also we look at daily trading volume. So based on that, we try to do our best in terms of given the constraints of the market structure, whatever best we can do, we do that.
Thank you. Everybody says that, investors are more informed. Maybe I have contributed a little bit to it. But is it true? And, do investors have more information or do they have more wisdom as well as a result of, what we have witnessed over the last, this whole democratization of information and opinion?
Investors are more informed. I'll put it this way, that investors are more than required informed. So
there's a problem of plenty. Okay.
It's a problem of plenty. Actually, some of the things which they need not know and they should not be. When they are paying a fee for something and the fund manager is taking care of that thing, they have to trust them. And when you are putting too many things, too much of information, then it becomes very complicated. And then sometimes diversification also, we go into over-diversification, over-information, over-diversification. See, all these things are make the things very, very complicated. In fact, fund managers across the industry are doing a great job. And there's a huge scope of alpha generation still in Indian market, at least for next 1 or 2 decades. The kind of businesses which are coming into the listing, and those businesses will never come into the listed space at all. The creamy layer will be over before they come into the indexes. Right? See, today there are the benefits, there are the negative part of this also. Today, when we talk about Nifty 50 index fund, right, or BSE 30 index fund, everybody knows that today 100 rupees I pay, out of that 25 rupees are going into 2 companies or 3 companies, right? That's a big money, and everybody knows about that. So this information is, everybody knows this much money is going to come and this much money is going to go into these stocks. And those stocks will never, where is the guarantee? The free float doesn't remain a free float. So free float becomes a theoretical kind of connotation. So there are so many things which need to be taken care of over the period of time, but just liquidity is a problem, and micro cap and small cap, but I think the way our industry is doing, at least in India, the regulators, what they are doing and the industry bodies, we all are doing together, I think this is one of the best places, and still there are huge scope of wealth creation and alpha generation. So, but passives and actives will coexist. The point where we are talking about all those people who are putting the money in fiduciary capacity, they will go for passive only, because nobody wants to take a responsibility when they are putting on behalf of somebody. But yes, as far as cost is concerned, today we have the cost range is so much that we are having the product starting from 2 basis points to 200 basis points. There's a 2 basis point product, there's a 5 basis point product, there's a 15 basis point product, there's a 30 basis point product. And when you go to the direct plans of active funds, those are available for 40 to 70 basis point, ranging between the size. And then within the fund houses, there's this thing. And if we talk about the bigger fund houses like Navneet and we are facing, our funds are going into, generally impression is that 225 or 200 is the cost. Most of the major funds are in 140 and 150 basis points. So if you go by cost, then you should, there's a point which comes to, then you should put money only in the larger fund houses, not in small fund house, because smaller fund house will always have a higher cost. So it has evolved over the period of time. 2 basis point, 200 basis point is the range. Anybody and everybody can pick up if they are cost conscious. But people are more conscious about the returns which they will make and where is the possibility. We are not a banking product. We are always in a volatile market. And the quality of management, the quality of how we reach out to people, the quality of when you talk about transparency, information, there should not be overdose of that. That's what we feel. But all the relevant things should be available, which is
Prem, you have been a very keen observer of mutual funds. I know him from the day he stepped into Khatri Pioneer and sending us faxes of NAVs that they created. So, in these 31 years, do you find investors getting wiser?
Of course, there's been a sea change. It was very difficult for us at that point of time to talk to people about mutual funds at all. Forget about more nuanced things about mutual funds. SIP was a concept which was completely alien to them. And it was very difficult. In fact, forget about this thing. I come from a business school. मेरे बैचमेट्स को बताने में बड़ा समझाने में मुश्किल होता था कि मैं म्यूचुअल फंड में काम करता हूँ तो म्यूचुअल फंड कंपनी करती क्या है. The others were working in Maruti, Hindustan Lever, bank, consulting company, ये वो बहुत ईजी था. मेरे को तो समझाना ही मुश्किल हो जाता था कि म्यूचुअल फंड कंपनी करती क्या है. And most of my batchmates would look at me. So we come from that particular situation to today where I think everyone's heard of mutual funds, everyone's familiar with it, everyone may not be fully aware of the nuances of it, but we've certainly come a long way, and hats off to all the people here who've done such a wonderful job. Hats off to you, Dhirendra. मेरे को एक टाइम पे मालूम है कि धीरेन्द्र लगाव रहता था. He was the only source on mutual fund data, और बहुत मुश्किल से data मिलता था उस टाइम पे. He was the only one who used to organize it. Today there are many more providers, and at one point I think industry should pay an annuity to Dhirendra. मेरे को मालूम है. एक टाइम पे he used to run a column in 30 publications. 30 publications में इनका column आता था. I hope I'm not under-reporting the number.
Yeah, I've been a very boring guy. I carry on,
Yeah. And एक जो आज तक सबसे popular business program रहा है is actually what used to be held by Dhirendra, a program on Star TV called Fund Ka Funda. Okay? और मेरे को याद है जब मैं धीरेन्द्र के साथ दिल्ली में कहीं पे भी जाता हूँ तो फिर मैं ऐसा फील करता हूँ कि मैं किसी सेलिब्रिटी के साथ में हूँ. तो लोग बाग आते हैं रेस्टोरेंट में, इसके ऑटोग्राफ करते हैं, इनसे बातें करते हैं, इनसे बहुत सवाल पूछते हैं. तो एनीवे आई थिंक इट्स wonderful the progress that the industry has made over the years, and for which, like I said, all of you have been responsible. So give yourself a big round of applause. A lot of it goes to what Amphi has done, and
mutual fund say
mutual fund say campaign has been actually a game changer. It has really moved the needle with Joe, and Dhirendra up.
So Navneet, the digital transformation is bound to become an even stronger driver for changing distribution model. So what are the directions in which these changes are happening?
You're absolutely right.
RIA is also a new animal.
No, everybody. I think even the way MFDs have adopted technology over the last several years, I think hats off to them. And of course, COVID was like a tipping point, and I think credit to the entire ecosystem of our industry, whether it's our regulators, whether it's our distributors, asset managers, the other ecosystem partners like QRTs, etc. There was not a single day in COVID, the whole country got shut, and there were like several businesses which couldn't serve the investors in the manner that they were serving maybe a day before of the lockdown. But in our industry, I think the way we served, I think, and of course,
there's this term called anti-fragile of Nassim Taleb, which I keep quoting, that we are in a world where these kind of events keep happening and you don't have to build the resilience, which everybody says, build resilience in your business. But I think what we have shown as an industry, good example, I hope maybe in the next edition, Nassim Taleb writes about it. We are becoming anti-fragile, where every crisis, we come out better. It's not that we handle the crisis well, we actually come out better and we innovate to ensure that how do we serve investors better? How do we serve investors better? And I think that's credit to the entire ecosystem. And technology is a big game changer. And I think the AI is the next one, which is probably bigger than internet. In humanity over the last several thousands of years, we had the first agriculture revolution, where we knew how to produce our own food and don't have to be a hunter-gatherer. Then we had the industrial revolution, where like a lot of manual labor moved to machines. Then we had the information revolution, where like a lot of this whole digital technology. And now we are entering the fourth age, which is like the intelligence revolution. Even the intelligence is thrown by the machines and what it can do. But I'm pretty sure that all of us will kind of adopt that with a single-minded focus, that how do we serve investors better and better. And I think now today, I don't know the exact number, but I think looking at our numbers, more than 90% of the transactions are done digitally, and the remaining 10% over the next few years will start getting digitally, both the financial and the non-financial transactions. Increasingly, I think the system is adopted extremely well. We're making it more and more, I think, safer, more and more secure, and more good. And it's not only about the transactions and serving, but even on the investor education side, what Prem mentioned and what you have done. By the way, you complimented us, Samphi, that mutual fund sahi hai, but you have been like one of those voices for 30 years through all the ups and downs, through all the challenges and maybe the obstacles that would have come. You have been like that voice who consistently been saying that mutual fund
Thank you.
And then kept that faith that this is the best instrument for investors. And I think thanks to people like you, and you asked about whether the investors have turned wiser. I think this 20,000 crore number tells you a lot about the maturity and how much wisdom that investors have got. Just a month ahead of the election, when historically volatility has been extremely high, flows become completely dry, whether it's the AMCs or the distributors, and everybody goes in like wait and watch mode, and you see 1,000 crore increase in the SIP amount rather than decreasing, both in terms of number of accounts as well as the AUM. That just shows the maturity of the investors. Yeah.
But to add on to that, like digital has really helped a lot. If you look at NSE itself, we have 9 crore unique investors registered up with NSE. So, and last 1 crore got added in 5 months. That is the kind of all the new digital platforms coming in. It's bringing in a lot of new investors on the platform. I think that is very, very important. I think mutual funds also same thing will happen. I think that is one. And I think increasing awareness, I think that is, as Navneet said, and this mutual fund sahi hai, because 5 years back, if you talk to someone, people might not even know mutual fund kya hai. Today, if you talk to people, more than 50, most of the people will know what are the mutual funds. Now, only thing is giving them the right advice, where to invest, not to mislead them. Like you said, 25,000 crores of 25,000 rupees SIP and 25 schemes. I think that is over diversification. Giving the right advice as per the requirement of the investors. Agar lazy investor hai, to passive karo, active karna, to ye karo. I think depending on the choice, you should consult and advise rather than looking at your own selfish interest. Look at the investors and then advise them where and what to invest. I think for passive also, I believe today people are not aware about passive. Now mutual fund, they know, but within that, active and passive, forget about people down the line, even if it amongst in our company.
Hold on. I have a very specific question on that dimension itself.
Sorry.
Which is, if there's a large-scale shift to passive funds, the cost to the investor will drop. Then inevitably that means that total pool of revenue available to the industry shrinks. And everyone makes less money. Then won't there'd be a stronger and stronger pushback? Because, finally we are in the business of making money too. Investors, distributors, and the whole pool. And a stronger pushback against, passive from other parts of the investing ecosystem. Because it actually crossed my mind, because you said that 9 crore investors have been added to equity, of which SEBI says that 92% people lose money. And even the guy who has done 25 SIP will end up making money if he keeps doing it for 5 years. So that's a huge difference. But the ecosystem and the economic drivers of somebody's activity could be a huge push. You can witness them.
First of all, let me clarify. That's 9 crore is the number of investors registered on the platform as on date about a month back. And SEBI's report of 92% people losing money is not in the market. That is on the derivatives trading. So it's not that SEBI...
Most people end up doing,
No, I don't think so. I don't even touch options and I don't even understand what is options.
You are in the minority,
Not minority. So that's what I said. Investor education is the most important thing. People should not... No, I'll give you a classic example. One Sunday morning, I walk up to my vegetable vendor and very diligently looking at some video on his mobile and drawing some charts on a notebook. I asked him, boss, क्या कर रहे हो? बोलता है मैं ऑप्शंस इन फ्यूचर सीख रहा हूँ. मतलब क्या?
That's exactly the point.
That is the misleading. मतलब क्यों नहीं मुझे किसी ने बोला?
आप लोगों ने रेस्टोरेंट खोला है जहाँ पे दूध बेचते हो और एक्चुअली बार है वो.
ऐसा नहीं.
It has to be seen like that.
ऐसा नहीं है.
9 करोड़ आदमी वो आया है.
No, it's a human psyche. See, people are greedy. No, people want to make quick money. People have also realized, boss, कि अभी SEBI ने जो study किया, that's what SEBI has done the study कि 90% of the investors in derivatives lose money. So people, that is the job now. All the brokers, when you go into trading in options and futures, first screen is, boss, it's very risky trading.
I did some research and Department of Company Affairs makes available balance sheet of private companies too at 120 rupees. I looked at it and then I looked at the scale of money which these brokers make. And most of them are actually zero brokerage long-term, delivery. They run a long delivery business with zero brokerage. So basically they are saying that आके म्यूचुअल फंड डायरेक्ट वाला खरीदो, लॉन्ग टर्म इक्विटी खरीदो, पर यहाँ पे बगल में बार है.
That's fair.
That's the business model, because all other parts of the business doesn't make money, and that is the pre-stated goal. So that is actually a very dangerous thing.
No, see, people, again, I will maintain that it's a human greed. No one tells them कि आप ऑप्शन बना के ट्रेड करो. अभी उसके पास इक्विटी कैश भी है, सेम प्लेटफॉर्म पे आपको इक्विटी भी मिल रहा है, म्यूचुअल फंड भी मिल रहा है, उसको ऑप्शन भी मिल रहा है. किसी को रातों रात करोड़पति बनना है, अमीर बनना है, तो that is a different game. So basically, people should not be misled. I think why those people come, because someone would have told him कि बॉस की ऑप्शन में पैसा बनेगा तो ट्रेड कर. So that's what I said. The distributors and advisors have to play a very important role. They should advise the people rightly whether to invest in equity, whether to invest in mutual fund active, whether to invest in passive, depending on the risk profile of the people. I think that is very, very important. And the question which you asked on the profit, I would let Navneet and...
Can I just add one thing? So we had 2 crore investors, unique investors in March 20, and that number is more than 4.5 crores today. So what, like you talked about people like Prem and some of us who have been there for 30 years and you have been doing, what we did in like 30 years, we have added more than that in the last 4 years. And of course, there are more number of people who got added in demat accounts, people who are doing F&O. In fact, you didn't talk about that. I've heard, on social media and all, there are more than 10 crore people who have been, investing, speculating, gambling, whatever, in crypto. There are 20 crore plus people, KYC, compliant on the gaming apps. I see a good thing. A lot of people ask me that, how do you see this trend? I said, it's very good. What I'm seeing in society, people want to make money. People want to become rich. Now, they are finding that different ways, but ultimately, nirvana ek hi hai. Wealth creation in the long run is sound investment, plus time, plus patience, STP. धीरे धीरे सीख जाएंगे. Let them go to wherever they want to go. Ultimately आ जाएंगे कि अगर HDFC फ्लेक्सी कैप फंड में 10,000 महीने की SIP करी होती तो आज 16 करोड़ रुपया हो गया होता. Mutual funds are subject to market risk. Please read the offer document carefully. Past returns are not guarantee of the future returns. I have to say that there's a different environment, but it just shows the power of compounding. More and more people will get aware of that. We have to take pride कि हम लोग 1.5 लाख SIP करते थे 10 साल पहले. आज हम ऑलमोस्ट 50 लाख पर मंथ पे पहुंच गए हैं. हम लोग 3,000 करोड़ की SIP बुक पे थे 6 साल पहले, 8 साल पहले 2016 में जब म्यूचुअल फंड सही है कैंपेन चालू हुआ. वहाँ से वी आर 20,000 करोड़ की जर्नी. सो इट्स बीन अ लॉन्ग जर्नी. वी हैव लॉन्ग वे टू गो. बट ठीक है, लेट पीपल ट्राई एवरी पॉसिबल थिंग. अल्टीमेटली इसी रेस्टोरेंट में आएंगे बिकॉज खाना यही बढ़िया है.
I agree completely that, that is where people will actually be fed. That is where people will be drunk and they'll end up losing. So the rise of artificial intelligence, AI, Is it an opportunity or a threat, or it is irrelevant?
It's definitely an opportunity, and this has to be used because reaching out to the people, because we can't do a macro kind of thing unless and we'll do some intelligence, do some data crunching, do some and use the services of some data scientists. It's very, very difficult because it has to be targeted approach. Everything cannot be sold to everybody. So AI is a big opportunity. But before that, coming back to your first question, which you said, they will be pulled back because the cost is low. So that is very important. We have to understand that in our country, I think we are a unique country where the basic ETFs are being sold at 2 basis point or 3 basis point. Across the globe, the costing is around 20-25 basis points. Index funds are 30 to 40 basis points, right? And even today, if you look at the business model, if we get more into the passive, especially the index funds, I think more volumes will make up for the money made. Even today, the active funds, if you look at it, as far as the profitability of the fund houses you talk about, nobody is making more than 30 to 40 basis points of the total, even on the active funds. And if people are making with the higher volume, 15-20 basis, that is good enough for this thing. That's not an issue at all. But yes, those things with the help of, coming back to your question, artificial intelligence, there's a huge scope. But passive, especially the index funds, have a very, very bright future, which will coexist along with the active funds. And there's a huge, money playing on the table. Yeah.
One last question for Navneet, that, do you foresee more and more concentrated distribution industry?
No, I think India has less number of distributors. I think 17,000 लोगों पे एक distributor. This number has to go up. There'll be more advisors. There'll be more RIA. There'll be more mutual fund distributor. There'll be more fintech. There'll be more all kinds of distributors. It's such a large country, 4.5 crore investors. This number has to go up 10x. There are all our studies show there are 15 crore people who understand, who listens every day. Mutual fund sahi hai. They know someone who has invested. They have seen somewhere. They've read somewhere. They've done a Google check, whatever. But still we have 4.5. So 4.5 to 15 ka journey itself is like another 10 crores to be added. Tremendous efforts will be needed. I don't think it gets concentrated. There will be a few large guys, but there will be tens of thousands of people, the way they serve. I think like we are investing so much in digital, but we opened 24 branches on the 1st January because we believe you'll need the warmth and the relationship, which is like physical, and I have to give the confidence to the to the distributor there. At the same time, we are investing heavily in digital. So both will grow. Everything will coexist. And we have a long way to go.
So thank you very much. And I close here before they scare me with a big buzz. Thank you.